All right, good morning, Lagos. Good morning, everyone. Welcome to Follow the Money, brought to you by Nairametrics. My name is Iko Dre, and of course, we do this every Monday on this channel, 8 to 8:30 a.m. Yeah, so if you are just listening or just, basically dabbling into this, where have you been? This is the number one flagship stock market show on radio. And of course, you can catch this episode and previous episodes on our podcast channel on Nairametrics TV on YouTube. You would also see several other interesting financial content for you. Yeah, so if you're someone who's looking at making money or someone who's looking at increasing your investment goals or meeting your investment goals or meeting your investment potency, then that's the channel you want to be checking, Nairametrics TV on YouTube. Just go there, follow, subscribe, and hit the notification button so that you won't miss when we have new shows or new content on that channel. Yeah, what a week it was again for the stock market. It's almost sounding like a broken record. Yeah, right? Yeah, because this is the 11th straight week that we have posted gains. It's as if there is no stopping this train. 11 straight hot streaks of weeks for the Nigerian stock market. The all-share index surging extra another 4,491 points to close at 145,754. So essentially, stocks gained 3.18% week to date last week, right? So 5 days, 3.18%. And what was traded was 7.7 billion shares, up from 4.8 billion shares the week before. And guess what that means? That has now pushed market capitalization to 92 trillion naira. Like I had said last week that we could be hitting that 100 trillion naira market capitalization by the end of the year. But it's looking like we might be hitting that by the end of the month. Because how do I explain that we're already on 92 trillion from 89 trillion just 2 weeks ago, right? And the start of the year, I think we're probably around 60 plus trillion. But look at that. We're now at 92 trillion. And if stocks continue to swell in market capitalization this week, then the Nigerian stock market could just be hitting that 100 trillion naira milestone. That is huge, man. You guys can imagine 100 trillion naira. I know it's still roughly $60-70 billion, but it's still a lot of money for Nigerian stock market. And that is obviously going to keep us up there as at least the top 3 stock markets in Africa. So what a week it was. And driving that gain was the insurance sector. They basically stole the show. They did. Insurance sector gained 41% last week. It was like everybody was just buying insurance last week, buying and buying and buying insurance last week. And if you are a subscriber to FTM, that's Nairametrics, subscriber only website, not nairametrics.com, ftm.ng, which is an acronym for followthemoney.ng, then you would have seen the insurance stocks that we recommended as well. So I'm not going to say that here on air, but we do have some stock picks. But I kind of noticed everybody was just buying all sorts of insurance stocks, all of them, all insurance stocks, all majorly had gains. Wow. And there's a reason for that. Reason for that, of course, is the insurance bill that was signed by the president 2 weeks ago. And it's now an insurance act. And that is basically seen as a major game changer. Yeah, I'm going to be doing a morning brief on it later this week and explaining why it's such a big deal. And investors are looking at them like, whoa. Looks like insurance companies are going to be the next big thing. And so they are already taking positions because, of course, they think that insurance-based companies are going to make a lot of money over the next few years. And so why not just buy their shares now that they're cheap? But you always got to be careful, and that's what I always say, because a lot of the frenzy you're seeing is all short-term. People just want to buy and sell and make money. And that's not everybody that want to buy and hold for long. So you have to figure out how you're playing this and which side of the play that you're in. Are you on the long-term play or are you on the short-term play? If you're long-term play, then you're looking for insurance companies with very solid fundamentals that really match what is in the act and not just jumping into insurance stocks. So everyone is jumping into it. And there are some articles on Nairametrics that we did profile some of the benefits of the Insurance Act, and you might want to check them out. And when you can, the industrial goods sector also did pretty well, gaining 8.73%, and that is a sector that has the likes of Dangote Cement, Boa Cement, Better Glass. So that's like core manufacturing sector on the index. They gained 8.7%, and then the consumer goods index also gained 8.27%. Investors still very happy with what they saw from consumer goods sector, and then the oil and gas sector is the only one that is still kind of struggling. Gained just 0.17% during the week, and the banking sector slipped 0.75%. That's opportunity. When you see like sectors slipping, then maybe that's just an opportunity for you to sort of dive right in. If you're a value investor, I'm sure you're probably looking at that. So it's going to be interesting to see what our top gainers are like all through last week. And I think from what I've seen here, our top gainers is a record kind of top gainers, because they're all from one sector. Like, that's incredible. But let's start first with the losers. And PZ Cussons, 9.77%. Next up was Austin Lars, 9.83%. Union Homes, REIT, that's a REIT, Real Estate Investment Trust. I didn't even know that stock was still quoted. Damn. Down 10%. Transcorp Power down 10% as well. Dangote Sugar down 10%. Legend Internet down 11.72%. UPDC REIT as well, Real Estate Investment Trust, owned by UPDC. UPDC also down 11.76%. The Initiates down 12.73%. Academy Press basically has fallen under my radar because it's down 18.18%. That is clearly under my radar. And we're going to be looking at that stock on FTM. Living Trust Mortgage Bank down 24.13%. And that basically rounds up the top 10 losers for last week. And these are stocks that lost position last week when compared to the week before. Yeah, so we go into the top gainers, and these are the stocks that made money for people. So if you own insurance stocks, additional insurance stocks, you've owned them and in your portfolio, you better go and check now. Like, just call your stockbroker, put them on the call right now. Or if you are one of those who have access to your portfolio online, you want to immediately check, because insurance stocks were on a tear last week. Like, they were off the hinges. Like, I've never seen this sort of stuff before. Like, even the days of, earlier in the year when banking stocks were the ones on a tear, I don't think they've come close to insurance stocks. I mean, check this out. The number 10, the least gainer for the insurance stocks last week was International Energy Insurance. And that stock gained 46%. So if you had 10 million naira in that stock last week, you're 4.6 million naira richer in just 1 week. Tell me which other investment does this. Tell me which one. Treasury bills, which one? Like clearing and forwarding, imports and exports, manufacturing. Where else can you make this kind of money in 1 week? Right. I mean, I'm not saying that if you put in 10 million, you're probably going to get that at 14 million. But you know what I mean? Like, it's 4.46%, which means if you had 1 million in there, obviously you're going to be coming out with 460,000 naira gross of taxes and deductions. Coronation Insurance gained 46.52% as well to make it at number 9. And then Veritas Capital Insurance, if you own that stock, it was up 51% last week. Yep, 51% in 1 week, 5 days to be precise. Regence Insurance gained 51.19% last week. Universal Insurance, 52.78% last week. And of course, top 5, Cornerstone Insurance, 54.46%. Sovereign Trust Insurance, 59.06%. And those are the top 7 gainers. And we're going to the top 3. And these are the ones that nearly cracked 60% or just about 60%. Royal Exchange, 59.3%. ICO, 59.82%. And Mutual Benefit Assurance. I mean, like, these are not your regular insurance companies that typically make top 10, but it was as if everybody was buying. Mutual Benefit Assurance did 60.44%. So it's almost as if everyone was just going after the stocks. You know what's crazy about all this? Some of the stocks that we actually recommended on FTM, it's not even in this top 10 list. And these are the stocks that we think are the most valuable. Like, you know, every sector has their MVPs. These are the MVPs of this sector. They were not even in this top 10. Just to show you how crazy, the sort of frenzy that followed the stock market last week, particularly for insurance stocks. I mean, it can be a little bit of concern because you want to be sure that people that are buying these things are buying it with some kind of sense, right? Like they really understand why they're buying. They're just buying it because of the arc, because you kind of have this bandwagon effect sometimes. It just goes into when people are making investment decisions or deciding whether to buy stocks or not. So you want to be sure that you're not caught up in this bandwagon effect, man, because it can be quite costly if you don't take time. Anyway, so that's what happened. And these are the top 10 gainers and losers during the week. So what are we expecting this week? Are we going to hit 145,000 points this week? Pretty likely, the way things are going. Looks like there's nothing stopping the stock market this week. All sorts of money is pouring in. And we think that we're not yet at the ceiling yet. There's still a lot of money coming in into the stock market. There are probably just 50 stocks out there people are buying. And so there's so much money going into them. And so the market prices, the valuations are going to keep going up. And that's what we think that's going to happen in the coming week. Are we going to crack 100 trillion this week? I kind of doubt it, but man, I stand to be surprised. Please surprise me, and let's see if we're going to hit 100 trillion. But I do expect that to happen, no longer at the end of the year, probably end of this month or at least this quarter, very likely, except something cataclysmic happens, and I don't see what's going to make that happen. The macros seem okay, at least improving, and so there's really not a lot of headwinds that we see out there for the stock market. All right, so we're going to take a short break, and when we're back, we will look at some companies that released results during the week. It's still the earnings bliss, and we're going to be profiling a couple of oil and gas companies and a couple of telcos on the second segment of the show, and let's see how well they're doing. We'll be right back in a bit. All right, welcome back. You're listening to Follow the Money, brought to you by Nairametrics. Of course, my name is Ugo Dre, and we do this every Monday on this channel. If you're listening to it on radio, 8 to 8:30 on this channel. But if you're streaming on YouTube, you can catch it anytime you want on demand. You can just watch it at your own pace, along with several other financial content for your chewing for you to enjoy. All right, we're back, the second segment of the show, and we're going to be looking at a couple of oil and gas companies that released their results and attempt to analyze and see how well they've done. And the first on the block is Aradel. So Aradel posted their second quarter results, and the pre-tax profit was 124 billion. Up 1.1% from last year's 122.7 billion. So their half-year profits is now 191 billion, up 18% from a year ago. So that's why you're probably seeing oil and gas stocks a little bit flat, because the growth numbers are not as much as it was the year before, but a 124 billion pre-tax profit in 3 months is actually quite humongous. And that's solid number there from Aradel. Q2 revenue was up 0.63% to 168 billion. Half year revenue now up 37% to 368 billion. So the first quarter numbers still the major growth driver for Aradel. And if you look at the mix of their numbers of that 368 billion, crude oil sales contributed 63% of that at 237 billion. And they did also get 116 billion from their refined products division. And gas sales contributed 18.8 billion. So solid all-round integrated energy company there. And one of the challenges that they had was margins. Margins was a little bit under pressure. Cost of sales spiked 32.323% to 90.3 billion, cutting Q2 gross profits by 21.23% to 77.8 billion. General admin expenses for the company also more than doubled to 30.7 billion, while operating profit plunged 52% to 55 billion for the quarter. So the company did experience a lot of margin pressure, and that's because costs went up. So despite the modest increase in revenue, costs went up, and that is why pre-tax profit was basically flat. In fact, probably would have been worse if it wasn't for finance income, which more than tripled to 8.3 billion during the quarter. So what that basically means is they did make more on finance income than on finance expenses. So it's kind of like when you have cash and you've put it in some kind of fixed deposit. So if you compare the income you get from that fixed deposit versus how much you're paying in interest payment to the bank for loans, then it means the income you get in fixed deposit is more than that. So you have net finance income, and they did pretty well. But in addition, tax expenses also dropped 70%, which is quite surprising. And that helped them with that, post-tax profit increase to 112 billion, 36%. So Aradel, one of the stocks on FTM as well, one of the stocks that we recommended at some point a few weeks ago. So you see, I just gave you a tip out there. So in case you're looking forward to investing. Share prices as at when this number came out, that was on the 30th of July, was about 514 Naira per share. And let's just check where Aradel share price is at the moment. So let's see. Just going to take us a second and we'll check whether Aradel is doing well. Aradel currently at 520 Naira per share on the Nigerian stock exchange. All right, or Nigerian exchange as they call it now. So we'll move on to the next stock, and that is Seplat. So Seplat is by far the largest indigenous energy company listed on the exchange. And their Q2 numbers also dropped, and they did drop a pre-tax profit of 139.47 billion. Now, put that into context, compare that to Aradel at 124 billion. So kind of close to each other. And just like Aradel, Seplat's profit was also down 0.76% from last year. So basically just flat, yeah? And however, Q1 numbers pushed the half-year profit to 454 billion. So Seplat had a very strong Q1. So look at it, 454 billion for Seplat in half-year compared to 191 billion in pre-tax profit for Aradel. So as much as their second quarter numbers were almost the same, Seplat did very well in the half year. Their first quarter numbers was just, off the hinges, and basically helped Seplat up 86% year on year. Seplat is, what's crazy about Seplat and even Aradel is that these are very huge companies, oil and gas companies, and they are posting profitability growth like their startup companies. Because startup companies are dropping sort of numbers like 86% year on year growth. It's just astounding. And that's what they're doing. And in terms of revenue, Q2 revenue soared 206% to 939 billion. Wow. So Seplat looking like they want to be hitting that 1 trillion number in 6 months. Almost hitting 1 trillion in 6 months. 139 billion half year. I beg your pardon. That's even Q2 numbers. Q2 numbers is now almost 940 billion. So in 3 months, Seplat is doing 940 billion, which means very soon in 3 months they're going to be hitting a trillion, because right now half year Seplat is doing 2.1 trillion for 6 months. So technically they are doing over a trillion naira every 3 months. That's just an incredible amount of revenue to make out of this country that you guys are saying like things are really looking bad, but right. 31% up year on year from 2024. So where was this money coming from? Growth was driven mostly by higher production, averaging 134,492 barrels per day, up 178%. So what that essentially means is that Seplat is seeing their production output increase year on year. So it used to be less than this before, but now they are doing 134,000, which is like more than double the production output, with crude sales making up over 90% of revenue. Now, in terms of margins, they did have margin challenges. Q2 gross profit 216 billion, up 18%, but margin fell to 23. Operating margin, profit margin fell 23% from nearly 60% of the year before, and so operating profit is 239 billion, almost 240 billion, up 47%, even though margins are down 25%. So they're also struggling with margins because of rising costs. Just the same thing we saw with Ardell. Higher interest on debt facilities and a huge 411 billion tax charge. Now think about it. Seplat is on line to pay taxes of 411 billion naira. That's like crazy. The Q2 profits, of course, slumped to 7 billion during the period, while H1 profits is at 42 billion, just because of taxes. So despite doing about 454 billion in half year pre-tax profits, because Seplat is in line to pay 411 billion. So it's pretty incredible, because out of their entire 454 billion, 411 was going to taxes. So Seplat is just going to be keeping 42 billion of that whole money for the half year. So interesting to see what the second half of the year is. And I kind of doubt that Seplat is going to pay dividend because of this, because Seplat tends to pay half year dividend too. So, but trust Seplat, they still are declaring dividend, and they declared a dividend of 4.6 cents per share, bringing total H1 payout to $67.7 million in dividend, up 28%. And so Seplat numbers, solid stuff there. I was going to go into telco, but let's talk about the breweries first, because that's another very interesting sector to look at. And the beer wars continue, with the top 3 brewers in Nigeria also releasing numbers. But we're going to start first with an outlier, and that is Champion Breweries. Champion Breweries posted 1.7 billion in pre-tax profit for the second quarter of the year, more than almost triple what they did the same period last year. And half-year profit is now at 3.4 billion, compared to a 333 million naira loss that it did the year before. So solid for Champions Breweries. In terms of revenue, the revenue is up 44% to 7.4 billion, driven basically by strong beer and malt sales. So you guys are drinking Champions Breweries malt in the south there. Good stuff. And so solid numbers. Half year revenue also up 66% to 15.9 billion, and gross profit surged 72% to 3.8 billion naira. So solid numbers for them. We did also notice operating expenses did go up, and for Champions Breweries, but nevertheless, Champions Breweries did solid numbers, and the share price as a time that they released the result was at 11 naira per share. I still remember this stock. My God, I can't, like, I have like PTSD from Champions Breweries, but looks like it's taking them over 10 years to basically turn around things, and the turnaround looks like, it's going well for the company. And so good stuff from Champions Breweries. I'm trying to figure out what their share price is like, though. I can't seem to get it immediately. But we're going to go straight to the next company, and that will be Guinness. So Guinness Nigeria did push out their half year numbers, and Guinness stayed a massive turnaround. Since these guys were acquired by Toleram, we've seen impressive stuff. Like, I don't know how these guys are doing it, but they have some impressive numbers, and they did post a 13.5 billion pre-tax profit in the second quarter of the year, which will be Guinness's fourth quarter of the year, by the way, compared to 13.2 billion loss the year before. So it takes the year-to-date pre-tax profit to 27.9 billion, reversing the 73.6 billion loss that it did the year before. So Guinness, solid numbers. But Guinness, in terms of market share, revenue, currently in that quarter, they were doing 118 billion in revenue in that quarter. So move to international breweries. International breweries did revenue of 167 billion in the quarter ended June. As well. So kind of looks like, in terms of market share, international breweries is still ahead of Guinness. And so Guinness at 118 billion, international breweries at 167 billion. So the beer wars continue. And then if you move to Nigerian breweries seems still is the one to beat in terms of share price. Unfortunately, I don't have my Nigerian breweries here. That's interesting. But Nigerian breweries is the stock, the largest brewer in the country, even in the second quarter of 2025, compared to Guinness or even international breweries. They did numbers that others haven't even can't even come close to, because according to the data that we have, if I'm not mistaken, I think international breweries or Nigerian breweries is in their half year numbers is at about 73 or so, 733 billion the first half of this year. And that is not the Q2 numbers, by the way, but those are solid numbers still for Nigerian breweries. In terms of Q2 revenue, their Q2 revenue is at 354 billion naira. And if you compare that to Guinness and international breweries, it makes you understand that they're a lot better. So I did want to talk about the telcos as well, but probably going to leave that for the next episode of Follow the Money. We're going to look at telco numbers, key focus, MTN and Airtel Africa. And we're going to find out how well those guys are also doing on Follow the Money. This has been Follow the Money, brought to you by Nairametrics. Of course, we do this every Monday, 8 to 8:30. If you miss any part of the show, you can go to our YouTube channel and check it out. And of course, you can check every other programs on our YouTube channel. Until we do this again next week, do have a profitable week ahead. Bye.